This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Managed money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, February 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up a penny and 3/4 at 427.5. March soybeans are up 8 1/4 at 1068.5. And March Chicago wheat's up a penny and 3/4 at 529.5. We are through the first day of 19 days for the crop insurance discovery period for the spring price. Corn starts the averaging at 455, while soybeans are starting at 1075. So we'll continue to monitor that as we go through the month here. Also, outside markets, pretty wild again here this morning. Gold up $300 at one point. Silver also up quite a bit as well. We've got news yesterday on some semblance of an Indian trade deal, heavily focused around not purchasing Russian oil, moving more towards being dependent upon the U.S. and possibly Venezuelan oil. So that's a big deal there. We got day 4 of the temporary shutdown going on in Washington, possibly going to a vote here this afternoon. So we'll be monitoring that as well. I think they said 78% of the government right now is in a shutdown mode. So they need to get something figured out there. We got crush out yesterday, 229.9. So right along with the estimates there, still a big number month over month. We've talked about that a number of times. But Ben, maybe share a few thoughts here with us this morning, and then we'll throw it around the room.
Yeah, you look at the headlines on trade deal with India, and it's vague, like a lot of the things that we see. Hopefully it becomes positive for U.S. agriculture. But I think more importantly, the shift away from them of buying Russian oil and the damage that could do to Russia. And we're seeing the world move towards maybe a path of more reliable supply, however that may look. So I think that's really kind of an interesting development geographically. It certainly does not seem to make a lot of sense, but it's an interesting development. And, I think that's the biggest headline in the last little bit here. And some anticipation was announced this morning that we are going to get some guidance in this quarter on renewable volume obligations. So, we're moving along, probably not at the pace that people would like. So we'll see how it matriculates. Corn held some pretty good support yesterday, but I think it's just a range-bound chop until we get into the last half of February. What can derail that between now and then would obviously be massive Chinese purchases, really big flash sales where we just start going bonkers with corn. But right now we're not the cheapest corn in the world anymore. So that is worth mentioning, right? So I think that rallies will be muted and breaks will be bought until we get to a point where the rubber hits the road here in the last half of February.
Yeah, Justin,
it's range-bound trade right now also.
Yeah, Justin and Ben brings up a good point. I mean, it seems like come hell or high water, he's going to figure out a way to end this war in Russia and Ukraine, and this could be just moving another chess piece. But I guess, what are your thoughts overall, and kind of what you saw to start in the week yesterday?
Yeah, I still feel the same way as we've been talking here. I think there's a reconciliation that has to happen between now and the end of the month. I think there's a lot of corn that has to move. I've had stories even yesterday. We're talking about, I think last week we were talking about banks that were calling, and just the overall concern in the industry as a whole. I heard of some big landlords that weren't getting paid on time. They had their first rent checks coming in, asked for extensions as farmers were moving product to try to meet the cash flow needs. So I do think this is going to be an issue as we go through, first early part of March between now and then. So that's kind of where my head's at on corn. And to Ben's point, we're not super cheap anymore compared to the rest of the world. So I do think there's certainly risk there. We might not see the giant buying that we have seen the last several months that we've gotten used to, kind of record buying on the export front. So it's a time of year that's just very vulnerable as we're, going through this phase. So that's my concern on corn. As far as beans, obviously soybean oil is up sharply overnight. We got some guidance from the Treasury this morning regarding 45Z. I haven't had time to go through it all, and even if I did, I'm not sure I understand all the wording they like to jam in there. But there's anything from used cooking oil talk in there to manure, all sorts of different things in it. So I haven't had time to really dive into it. Obviously, the market's finding it pretty friendly to start. I think you still have to confirm a lot of those things. It's just guidance. But at least it's a step in the right direction on that front. So, I haven't really changed my tune. Obviously, the outside markets are just going nuts again. Every day we're having moves we haven't ever seen before in the metals. So certainly can't say that there's not a lot of dollars out there chasing things. I've been watching a lot of things on just the M2 money supply, the amount of money that's just out there chasing products. So, if we do have a story, it's a big if. Right now we don't. If we were to get a story, I think volatility will increase rapidly. We're probably discounting volatility quite a bit in grains right now. I'll call it, post March 15th. I think that we might turn that trend a little bit.
Yeah, it'd be nice if we kind of keep that volatility slightly muted for the next 18 days. We could get a pretty inexpensive premium structure for crop insurance and then load up there, to get ourselves at least in some semblance of a position before we go to the field.
Yeah, you hope. I think that's why I'm kind of focused on spreads. Because I think could be two different opposing fundamentals here in corn, for example, where East corn tries to keep a bid, going through February through crop insurance, and March corn has a supply problem in the short run, right, and a cash flow need problem. So I think we could see those two kind of trade a little differently, where I think on the big breaks, the buying will be in the new crop corn, and on the rallies, the selling will be in the old crop corn, at least for that period of time.
And
yes, we do it'd be nice to have it cheap. You just don't want to have cheap premiums because we're 30 cents lower.
Yeah, right. No, that's exactly right. And I mean, nothing to sway your opinion from a pricing structured standpoint between corn and beans at this point.
I mean, as far as, what do you mean by that?
Just planning decisions,
Planting.
Looking at.
Yeah, I will say we've been doing a lot of orders last days today with new crop beans. There's some interesting things that we're seeing in the structured products market. Not sure why it's there. It seems like a really good deal. So if anyone has questions, call us on that. So we're getting a little aggressive there. We haven't really seen that opportunity yet in corn, but we'll be looking for that too, as we go through the month.
Oh, very good. Got a couple of minutes here, Ryland. Back to fresh highs in fats and feeders, and hogs, pretty much the same story as well, carving out new highs. So what are your thoughts here as we start the day?
Yeah, no question about it. Report pretty much allowed the market to get back what it lost, the previous week. So it just seems like the numbers are still tight and the market's still going to trade that same sentiment for the time being. Obviously, it's not like this solidifies a bull market for the next 2 years, but this is going to be a slow progression, I think, to get overall the supplies that we need to kind of actually, influence this market kind of in a downward direction, especially with things like the border closed. So, I think that's really where everybody's going to be on the edge of their seat, is just waiting for any kind of new developments on border reopening, if it's going to be a phased reopening, if there's going to be more pressure in the spring. There's been a lot of rumors about that going on. Or if screwworm enters the U.S. for some reason. I think these are the big, kind of caveat downside factors, and they're here to stay for a while. But obviously, just from a supply standpoint, we're the lowest we are in 75 years. So it was nice to see a new high. Obviously, it clears a lot of room for more upside. You got the feeder index just $2 shy of all-time record highs right now. Auction prices screaming higher. Feeder steers are 4 to 13 higher, so just coming back from a holiday break. So it just seems like there's a lot of bullish news here, and the market's still kind of digesting it slowly but surely. And on the hog hog side of things, we kind of opened more steady-ish and then just jumped higher. I think you got some spillover buying from the live cattle market, but also just technically and seasonally, I think there's a lot of optimism as far as, the pork market goes. We are seeing cash markets a little bit weaker here this morning, 82.22 down $1.35, but it seems like that continuously gets shaken off. Managed money has been a really aggressive buyer, another 4,300 gain in open interest. So it just feels like that buy is still here. And I think just in the longer term, there's been a lot of talk about Chinese liquidation and Mexico restricting some of their pork imports through tariff quotas. So, I mean, it feels like you're having a little bit of a shakeup in the global protein market as well. And I think that just kind of keeps this kind of bullish trend alive for at least for right now. And that's following seasonal trends as well. So we'll see if it continues. But once again, just protein markets look to stay pretty strong. And overall, the demand seems pretty firm as well here right now.
Yeah, one of our frequent viewers here asks specifically, Ryland, your thoughts on the kind of the April contracts for hogs and beef there.
Well, in both places, I mean, it's a strong market. I mean, typically we see these kind of seasonal trends top out anywhere between the 17th to the 20th of February. Now everybody can see that chart that's on like a 5-year seasonal. And it seems like the managed money funds want to stay kind of along these markets. I think overall we're seeing, especially in hogs, we'll probably start to see a lot of movement out of the April and into the June. We already started seeing it. Most of the commitment yesterday was put in the June contract. So I think just overall, on the hog side of things, this is everybody's bread and butter. June represents the biggest seasonal demand that we have. So I think if there's any comfort in length, I think you're going from the spring to the summer pretty quickly, especially on these kind of moves, just as even a flight to safety if something goes wrong. And on the cattle side of things, I think there's some big risk as we start to get into the summer contracts. I don't know if it's going to impact June so much, but obviously that's, we're talking July time frame. That's when the next inventory report's going to be. So I think there's just a lot of I think overall there's going to be a lot of concern as we get into those timeframes, but I just don't see any way out of this kind of tight cattle supply number anytime soon without any kind of reopening of the border.
And when you reference June, you're referencing grilling season and the peak demand for being outside and cooking.
Exactly. That represents just seasonal domestic usage. Going into hot dog season, that's a big one. I know not a lot of people like to talk about it, but it's there, and it's a real thing. So
it's a real thing in my house.
Yeah, I know it.
There's bacon season. There's hot dog season.
I'm in meatloaf and chili season right now in our house.
Yeah, meatloaf and chili season. We're gonna pitchers and catchers are coming soon. Oh, that's funny. All right.
And he says it's just us Americans that are grilling. They still grill in Sweden. All right, I know that. But
good stuff. Thanks, Ray. Appreciate the update there. We appreciate everybody that tunes in. In the comment section there, we've got the link for War Room Report. Be sure to check that out. If you like watching War Room every day, looking for premium content, a deeper dive into a lot of the things that we talk about. Justin, you've been referenced here today. Some of the soybean hedging things we're looking at, just some thoughts, deeper thoughts into the markets. Be sure to check out the War Room. Also, as we go through crop insurance decision and discovery periods here through February, we're going to be doing a lot of premium content that helps talk about strategy, talk about different things we're looking at that could potentially help your operation. So check out the War Room Report. Also, 10% of all subscription fees go to support the AgYield Next Gen Foundation, supporting the next generation of ag leaders through our national scholarship competition. So be sure to check that out. We appreciate everybody that tunes in. If you wouldn't mind, throw us a like and subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.